Ah, man, the markets were rough today. The S&P and the Dow went down 2%. We had the NASDAQ 100 down 2.6%. And brace yourselves for this, guys. Brace yourselves. The Russell went down 3.2%. So today we're going to break down some technicals, go over my thoughts on the market, why the market sold off today, and some stocks I'm watching as we're seeing this sell-off. So sit back, relax, take a sip of your coffee. You're going to need it for this one, and let's get right into the video. So look, SPY and the Dow, they're finally starting to catch up to this overall sell-off that was really started by the tech names, right? We've seen the tech names go down. That's not anything new here. I mean, look at QQQ. Over the past 2 weeks, we've been seeing this sell-off, and you guys obviously know that if you track a bunch of tech stocks, many of them are down, some more than others, right? And the Dow, like I said, and the S&P, those were holding on. And at this point, they're not holding on anymore. Look at the Dow. Dow is down from 35,000. Now it's chilling in the mid 33,000. So now the Dow is down almost 5%. We're approaching that 180 moving average here on the 4 hour. So I had to look and see if we maybe get some sort of relief rally on the Dow, especially if it gets lower into the lower 33,000s. That's very possible in my opinion. We get a little pop in the short term. And look at SPY. You know, SPY at this point in time, and you can see it on SPX as well. SPY is approaching 403. We called that out yesterday. You guys remember that. 403 was that high from the end of March. That might be a spot where we do see a relief rally, but the second we break 403, I'm thinking we're going to go to 398, which we also mentioned yesterday, and that was the high from the middle of March. So SPY's not looking good, and pulling up SPX, you guys can see this is approaching the 180 SMA on the 4-hour chart, right around 4,020 points. So that is going to be a spot to watch. And you want to see one of the craziest things I've seen these past couple of days, and probably the past couple of weeks? The VIX. The VIX is up 26% today. It went up 26% today. And did I not say this? I mean, did I not say that when the VIX breaks up above 20, it could get to the mid-20s in no time, very quickly, and now we're in the high 20s. This is unbelievable, and you may be asking yourself, Stas, what prompted this sell-off? Well, you probably know, so I don't want to dive too deep into this because you've probably heard it all day, but it was the CPI numbers, right? Inflation accelerated at its fastest pace since 2008 last month, with the CPI spiking 4.2% from a year ago compared to the Dow Jones estimate of a 3.6% spike from a year ago, and the monthly gain was 0.8% versus the expected 0.2%. And if I pop up the screenshot right here, give me a second, guys, you guys can see it right there. We can see that, look, up top to the right, that's where the April number is, and the March number was 0.6%. So we saw a spike up from March when we thought we were going to see, well, the Dow thought, the Dow Jones survey, whatever that means, they thought that, it was going to be 0.2%, and we came in at 0.8%. So that is not good, and a lot of this increase is attributed to the used cars and trucks. Look at the bottom left here, used cars and trucks, that increase, and you can see the number now to the right, all the way to the right. It increased 10% in the month of April. So if you're in the used car market right now, you want a used truck, good luck. You're paying a markup, man. You are paying a markup. 10% increase. That is ridiculous. And other than that, I mean, yeah, we saw some other big increases in transportation services. That was close to 3%. We saw a spike in all items, obviously, like we just went over. And we also saw utility gas service. That went up 2.4%. Commodities up 2%. So we saw a spike across different categories here, but a lot of it came from the used cars and trucks, and the market did not like this, right? And is this going to cause a sustained sell-off in the markets? It very well could for the next couple of weeks. It very well could, maybe to next month, month's report. Maybe we have to see a little bit of a sell-off here until the next CPI number comes out. But I feel like we're going to get a relief rally regardless, whether it's tomorrow, whether it's one of these days, maybe next week, we're going to get a relief rally followed by more selling pressure. That is an option that I'm leaning towards right now. But in the very short term, it's very obvious we're oversold in these markets. You can see even on the Russell 2000, the RSI is oversold, the Dow is oversold. We saw that. S&P is oversold. So this is the start of a big volatility pump, right? We're seeing the big selling kicking in. This very well could be the start of a further crash. But again, markets move not all in one direction, right? When something's oversold, we snap back. When something's overbought, we end up pulling back. So I really feel like there's going to be a relief rally, and then we might see some more selling pressure after that. So watch out for these main moving averages on SPX and on the Dow on the 4-hour chart. These are going to be very key spots heading into not only tomorrow, but the next couple of days. We're going to be watching those levels very, very closely. And I mean, gold went down 1.1% today. Silver went down 2.2%. Bitcoin, last time I checked, was down. Same with Ethereum. So there's a sell-off all around in terms of the different asset classes. And this is why you guys must have cash. A lot of people don't realize cash is an asset class in itself and isn't necessarily an asset that you invest in and hold long term. No, you guys know, I mean, if you put money in cash long term, that is a losing strategy. You must invest your money long term to become wealthy. Nobody really got wealthy by saving money, but when we're talking in the short term, let's say you want to hold cash for a year, 2 years, sure, you might lose a little bit to inflation, but overall, if the market drops more than what you lost to inflation, it would have been smarter to hold that cash and then buy stocks maybe at discounted prices, right? Which, as of now, we're seeing, in my opinion, some stocks at discounted prices. And I made a video earlier today going over 3 oversold stocks to buy, 2 of which I'm buying now, 1 of which I didn't buy yet. So go check out that video after this one. We're not going to mention any of those stocks in this video, so you got to go check out the previous one. But overall, yeah, a lot of people don't realize cash is a position, so be mindful of that, right? I'm not telling you to go all cash, 100% cash, 50% cash even, and you guys must not take my advice anyway. I mean, always do your own research, due diligence, and it's all relative, but I believe that having at least 10, 15, 20% cash, 30%, I think that's a wise amount to have during situations like these, right? So what are your thoughts? Let me know down below, and if you all are enjoying the video, make sure to smash that like button, and let's get into some stocks here. Number 1 being Google, ticker symbol GOOG, and going back to my little theory of a potential snapback relief rally, Google could benefit from that. I mean, look, Google went down 3% today, which, believe it or not, 3% is a big down day for Google. I mean, this company is a $1.5 trillion. So if it's moving down 3%, do the math, that's billions of dollars being lost, right, guys? It's not like a company like, let's say, Virgin Galactic, for example, that doesn't have that much of a market cap. If it goes down 10%, hey, that makes sense. That's the type of volatility we're used to with that stock. But for Google to go down 3%, 5% even, that is insane. And at this point, we're approaching where the uptrend has held over the past couple of months, right around that 180 SMA here on the 4-hour chart at about 2230 right now. We might go a bit lower, 2200 even, but I believe that this dip could be bought. I think there's going to be some upside from here, and maybe we don't go to all-time highs. But again, going back to that relief rally point, we might see a relief rally, maybe back up to that low point from the 4th of May. I think that could be where we end up going, and that's at about 2300. So there's about $100, maybe not $100 per share, but at least $50, $60 per share to be grabbed here if we do end up going to 2300. So watch out for that for Google. And I might even buy some fractional shares for Google here, especially especially if it ends up getting under the 180 SMA here and maybe gets down to 2,000, maybe under 2,000. If that even happens, I'd definitely be buying some shares there, fractional shares. We'll see when the time comes. But overall, I'm watching Google. I'm also watching Amazon. So I have a lot of these big tech names in my watch list right now. Amazon hit 3,600 after that earnings report, and it cut $500 per share very quickly. And I actually bought Amazon 2 days ago, or that was yesterday, right? And I bought more Tesla yesterday too. And this is down 15%, just like that. And I think Amazon is going to hold 3,000, 3,100, possibly for that relief rally that we're talking about. And if it breaks 3,000, look, we might not get that relief rally. 2,850 could be next, and I'd buy more there. So overall, look, I'm not getting scared out of these tech names right now just because the fears of inflation, the fear of the interest rates going up. I'm not selling out of Google or Amazon. There's no way. I'm only buying more. I'm only adding to these positions. And let's say we get a further sell-off. Look, we could play SQQQ. We mentioned that in the previous couple of videos. This went up almost 8% today as the NASDAQ 100 or QQQ went down. You guys can see QQQ went down 2.6% today. It ended up taking out that low from yesterday at 318, which I expected that to happen. Now we're at 316, and maybe we go down to 313. That was the low from back in the end of January, end of February, also in March a little bit. So if we end up going a bit lower here, there could be more upside in SQQQ, right? Which goes up 3 times what QQQ goes down. So let's say the NASDAQ goes down 1%. SQQQ is going to go up roughly 3%. That is how that works. And there's an inverse to this. It is TQQQ. So if you think you could play the relief rally that we might get, I'm not saying we will, we might get it. And the question is, when are we going to get it? We will get it, shall I say. But the question is, when will we get it? So if you think we will get a relief rally soon, TQQQ is the exact opposite of SQQQ, right? This goes up whenever QQQ goes up at a 3x rate. So let's say QQQ is up 1%, TQQQ will be up 3% that day, and this went down 7.6%. So this could be a nice play if you think that QQQ will bounce back. And SPXL, SPXS, that duo is another one I'm watching right now, and the only difference is this tracks the S&P 500, right? So SPXS goes up 3 times what the S&P goes down. You guys can see this went up 6% today. The S&P went down about 2%, so you guys see the correlation there. And SPXL goes up with the S&P. So if you want to go long the S&P with a leverage tool, for day trading, that is, these are not meant for long-term investments or swing trading. These are for day trading only, right? You could end up playing SPXL. So if the S&P went up 1%, SPXL goes up 3%. So I'm watching these very closely, right? Tattooed Chef is another one that I'm watching. They just reported earnings today, so we have to break these down very quickly. And the stock ended up tanking down a bit. You guys can see it went down to about $16.15. It dumped about $1 from that closing price of $17.14, and now we're actually trading right near that closing price. In fact, earlier we were over it, and by earlier I mean earlier in the aftermarket hour session, we got to about $17.40. So overall, it's a mixed bag sentiment when it comes to the stock's price action. So what did they report, right? Revenue came in at $52.7 million, guys, billion, gosh, it's not Google, right? Revenue came in at $52.7 million, a 59% increase compared to the $33.2 million in the prior year period. Tattooed Chef branded product revenue was a record $36 million, an increase of 105% compared to the $17.6 million in the prior year period. I like that. The focus of this business has been to increase the branded products, the revenue from that, and hey, 105% year over year. I'm taking that all day. Gross profit was 13.7 million or 26% gross margin compared to 9.2 million or 28% gross margin in the prior year. So gross profit came in a bit more this year, a lot more actually, but the gross margin on a percentage basis is a little bit lower from what happened last year, but I'm not too worried about that whatsoever. And the net loss was $7.9 million compared to the net income of $5.9 million in the prior year period. That makes sense. I mean, they've made acquisitions, the company is reinvesting into marketing, all that stuff. There's not going to be a lot of profit at this point, and I'm cool with that. And EPS came in at negative 10 cents, and they see full year 2021 revenue of $235 to $242 million. So I would rate this earnings report as a success. I'm definitely going to dive deeper into this, maybe even make a video about it, maybe not, I don't know, we'll see. And I'm happy about it overall, and I want to monitor this stock and see what it ends up doing tomorrow. You guys can see on the 4-hour chart, it is still in this wedge, making lower highs, but also making higher lows, and it's still going to be in this wedge until it breaks above 20. So we need to see it break 20, and I'm going to set an alert there. And quite honestly, I don't even need to set an alert because I watch this stock every single day, but I'll set an alert anyway at $20 because that is where it would officially be breaking out above the moving averages and above the wedge. So watch out for Tattooed Chef. TTCF is the ticker symbol there, and AbbVie is another one, ABBV. This stock has been holding up pretty nicely. Look at that. Today it went up 7 cents, and this, by the way, full disclosure, is one of my long-term dividend stocks, one of the stocks that I don't plan on selling for 5-10 years at least. I want that dividend income. I want to reinvest that dividend income, and you guys know I'm not a dividend investor by any stretch of the imagination. I focus more on growth, but I do like having diversity. I like having some healthcare companies like AbbVie, Johnson & Johnson that pay dividends that I can reinvest and that are known more as quote-unquote safe companies, even though there's no market or company in the market that is 100% safe. That doesn't exist, but hey, I'm in these that are a bit more, let's just say, stable than something like Tattooed Chef or even, a lot of these other growth names I have, Neo, Tesla, and so forth. So, yeah. AbbVie I'm watching, it's breaking out of this ascending triangle. It did about 2 weeks ago at the end of April, so that's a good sign. We're trading above the moving averages. That's another good sign. And we saw a golden cross, which is still in place at this point, and we're pulling back now. We hit a high of 117. Now we're trading at 115, down about 2%. I'd like to see this thing come down a bit more. If it gets down to 111, maybe 112, even 110, and I'd consider it as a swing trade there, or maybe even I'd add more to my long-term position, especially if it got down to the lower hundreds. We're talking $100, $105. I would definitely be buying more AbbVie at that point in time, considering, and I haven't checked this in a while, their dividend last time I checked was about 5%, so maybe it's 4% now, 4.5%, whatever. It doesn't really matter, and that's the thing, guys. I don't really check my long-term investments every day, and by that I mean I'm not in my account staring at the long-term investments. That just drives me crazy. I buy stocks for the long term, and I just forget about them. Obviously, I keep up with the company, but I'm not just nitpicking my account every single day. I feel like that is the wrong way to go about it, especially if you're a long-term investor. What you want to do, at least in my opinion, and I've heard this and learned this from the greats. I mean, I'm not pulling this out of my you-know-what, right, guys? But what you want to do is find a couple of great businesses and just buy them and just hold on to them, right? And buy them every time they dip 5, 10, 15, 20%. Obviously, you'd want to buy more when the stock goes down even more, especially if you believe in it, if it's a high conviction stock for you. And again, we're talking about long-term investing now, right? Not options trading in the short term or swing trading or day trading. That's completely different. We're talking for the long term here. So another stock, the last one for today, which has been holding up as well, is AMC. In fact, this one up almost 3% today. One of my only green stocks in my watch list, believe it or not, guys, other than Exxon and Tattooed Chef. What a red day it was today. Unbelievable. And I like AMC because look, we're holding above the moving averages here, and we're about to test the resistance of the wedge at about $11.30. And I'm thinking if we take this point out, there could be a big swing back upwards, especially if the markets do see that relief rally. I could easily see money flowing back into AMC, breaking us out of this downtrend, and then we could go back to $12, maybe $12.50. So watch out for AMC. I like the way it's holding up today in an overall red market. And gosh, I keep looking at that VIX. That VIX was scary today, guys. 26%. What in the world was that? So we'll wrap it up there. Hope you all enjoyed the video. Let me know in the comments your thoughts. If you want to hit the like button and subscribe, feel free to do that. We're doing content here every single day. And if you want some free money, check out the WeBull link down below. You get 2 stocks from them with a $100 deposit. You can also get $30 from M1 Finance with a $100 deposit, and you can get $10 free from Coinbase. All of those are linked down below. Same with my Patreon. If you guys want my real-time buy and sell alerts, call-outs, morning update videos, going over breakout stocks in the morning, the futures, breaking news, all that good stuff. And if you want more direct access, all of that is on Patreon, linked down below. Or you guys can go to patreon.com/DaSurfest. That's patreon.com/DaSurfest. So I'll see you all there. Catch you all in the next video, which, oh, by the way, is that video I made earlier going over 3 oversold stocks, which I didn't mention in this video. So go check that out. I'll see you there. Thanks for watching. As always, guys, keep crushing the market. Stay safe out there. Peace out.